How you guys doing? Welcome back. Today's lesson 25, convergence and buying in. So one of the two sides of the coin that most beginners find hard is actually buying and selling. And this is going to be a great lesson about the three ways I like to buy in. The first is value. When I say value, I simply mean that the price goes to a value you determine to be good. $1, $5, $10, $1,000, it doesn't matter. Whatever you determine to be a good value on the stock, you buy in, you then set your price target, and you go from there. It's easily the simplest idea. Now, it's not always the best in every situation, but for a beginner, it's a very cut and dry idea. If the price dips, hits your loading zone, you determine a value you want to buy in, you choose that value, you buy in, you let the bad boy roll. It's very easy. Number two is a crossover. What we're going to notice with some of these plays is that the EMA lines, SMA lines, MA lines, whatever you use in whatever time frame, whatever value you set them to, price may be close to value, it may be close to EMA lines. If you want to be more risk averse, if you're more worried about risk, this is probably more up your alley. What you're going to do is allow the price to dip to a value. You go, I like that value, but I want to see some life first. You want to see the green come, you want to see some volume. It starts to show life. It crosses over. It goes from below the EMA line to above the EMA line. That's when you make your purchase. You then reset your stop loss a little bit lower below that. Let that bad boy run. The third way is scaling in. This is definitely the best way for those who want value but don't want to just chuck the whole pot at the stock and hope it does well. You can let it dip to where you want it. Put half in, it dips more, average down one more time, great, you have a better entry point, you can hold a little bit less risk. Or two, it dips, you put a little bit of money in, starts to take off, put some more in, and again, you average towards the bottom, towards the middle bottom, it keeps running, you got a good price. It's definitely one of the better ways to avoid risking everything, especially when the macro markets, which we'll cover, are high near resistances, being kind of shaky. You don't want to just go, all the way in, 100% all the time. Doing 45, 55, 60%, and then letting it kind of sit and let it do its thing is always smart as well. I'm going to show you examples of all three of those today. So what we're going to do today is use the on-demand tool, go back, show all three examples. I have 4 for each, show how that would have operated, how it would have worked, how the trade would have worked out for you if you went for it with these entry strategies. So that being said, y'all, let's get into it. So the first is value. I don't want to overcomplicate value. It's really simple. You buy a stock because the price is low, and you sell a stock because the price is high, usually. And so you're going to try and track the value of the ticker you're watching. Maybe it went from 100 to 80. You're like, hey, that's a great value. So you buy it at that value. So of course, there's different ways to think about this. Maybe use Fibonacci, use the EMA lines to bounce off them. Maybe you just want to use price action. It doesn't matter. But in the end, all you're doing is trying to find a good value for a ticker. You buy that value, let that bad boy run. I have 4 examples. Let's check these out. So this is ASH. It's a great looking ticker. I did the charting for you. I don't want to take too much time because I want to keep this simple enough. As we can see, the price action has made a really nice horizontal channel. We have lower highs here. We have a very definite go signal once you break above this area. But just for the play itself is a super simple looking horizontal channel. So we have obvious value down in this area. So let's just say we bought in. So let's put a line where we would have bought. Let's just say we bought right in the middle where these 2 wicks are, right there. Boom. We buy in. What we would do then is delete our loading zone. We're now in the trade. We have our price target determined, and we have our stop loss determined. We've now entered because of value. All we're going to do now is wait and let this develop. Let's see what happens. So we chose value. We got into 84.30. We can then jump ahead about a day here. Let's jump about a day. Ooh. So what we can see now is the first hour price jetted up almost 2.69%. It did get into a price target. You could have validated out there, but again, you bought in because of value. It jetted up. You can then choose from there. As we see as time goes on, small pullback, it's still going. You can then watch your trend line. You want to put one and watch it kind of like this. We can see it's trying to test and break that right now. But as we can see, and we'll discuss in our validation episode, what we would do here. But again, the very simple idea is you went to a certain value, you bought in, and then took off. Again, if it were to die, you'd have a stop loss instead. But buying into value, again, is the easiest idea. It hits a certain number, you buy in, you let it go. It's fantastic. Let's check 3 more. So this is ASR. We can see a beautiful uptrend, a beautiful horizontal channel, possibly a little bit lower. But look at all this. We have our POC. We have our trend lines here. We have our support. A lot of stuff is converging together. That's what you want to see. So let's say we buy off a value. What would happen? Let's just say for hypothetical reasons, we have ourselves, it comes down. You're seeing it starting to kind of bull up, kind of reverse here. Let's say after hours, I put my order in right here, just like that. We put our order in. Let's see what happens. We'll jump ahead a little bit. Boop. We can see it's still kind of sitting here. Let's move up just a little bit more. So we can see the next day it went up and it came right back down. So again, we have a nice movement of almost 1.7. We're holding at 0.75% higher. It keeps running. Let's see what it does next. It's showing some life. So right here, we're just holding. Let's get rid of this box. As we can see, we bought in here. We now have our price target set and our stop loss. You can change your plan if you want to. If you get closer to maybe like 181, it starts to kind of look shaky. That's fine. But again, with this going on, we hit the on-demand button off. We can see we bought in here off value. It's cruising up higher, easy 2.5%. Sure, you can see right here we would have gotten in. And with the validation video, we've gotten at least 4% here. Easy win in my book. Again, super easy idea. Let's check two more. Here's ATRC, gorgeous uptrend. Again, 3 solid hits, but the support area is super clear too. We can see as time goes on, we're coming down. I want to make a play on this, right? So let's say we go to Friday here, 1 day ahead. It's kind of getting close. It's getting close. It's getting close. Let's do Monday here. And we can see on Monday, it dips right into our zone, right? We dipped right into this loading zone. Let's say we had a limit buy order right here. Doesn't matter. That's fine. We buy in. We get rid of the loading zone now. And now we have our trade ready to go. This is a great reminder for you. After you set your trade, make sure you have a stop loss and a price target written down. Make sure these are ready to go on the chart or somewhere else. But again, once you enter, get rid of the loading zone, you're good to go, right? Let's clear up the chart a little bit. This makes it a lot easier to read. I like it a lot. So you can see now we have our buy-in spot, we have our price target, and we have our stop loss. Again, a tight stop loss. If it breaks down, we just buy down lower. We then wait a day. It goes on. Oh, looks pretty good. We can see it's been running up really well. Super simple. You would have gotten close here. That's the power of doing this correctly, of validating out here. But let's say you would have held. It keeps going. On Wednesday, we would have seen it got close again, broke into it, and again we turn it off. We can see it's now holding in this area. Would have been a very easy buy-in, easy 6% and some change. Super simple. Let's check one more for value. This is ATVI. We can see we had a nice sell-off. We have what seemed to be a descending wedge forming, and I've been tracking this because every time it has these kind of descending trend lines, it breaks it, you have really nice run-ups. It breaks this down, again runs it up. I'm seeing one of these forming here with a trend line. I want to watch this. And again, we have a great support play. So we're watching this. It's on the horizon. We then wait for it. We wait till Friday. Let's go to Friday real quick. Oh, it seems to be coming back up. Sure, but I want to wait for it to get to value. We go to Monday. Boom, it's right where we want it to be. It's dipped right to our loading zone. It looks good. Let's just say hypothetically, we bought in right at the top of it. Looks good. Get rid of this. Awesome. You then go to 20. The next day, we can see it actually dipped down lower. That's fine. That's one of the cons of the strategy. You're going to find sometimes you buy too early and sometimes you buy too late. It comes down, it starts to reverse your buy-in, or it comes down, you buy in, and it just keeps going down. That's just the downside of the limit buy order, the market order, and just going with value. We'll talk about scaling in kind of stops this, but again, for a beginner, it's a fine strategy. We still got a fantastic deal here, and as we can see the next day, 2 days later, it's up 2% where we wanted to be, and as this trade develops, as we can see, it's getting closer to validating out. We had our buy-in, stop loss. Now that we're on our price target, we can make a decision. It's hitting the resistance trend line and dying. It's also hitting the POC and the resistance. This is a lot of stuff going on. I don't think it's going to live here, but again, my worst case is I'm still green on this trade. Super easy concept. Let's not complicate it. If you're going to buy off a value, that's totally fine. The pros is a simplicity. A limit order, a market order. I don't use market orders. I only use limit orders, right? But if you want to just buy in with just a simple number in mind, this is for you. Really easy idea, super easy concept. Let's talk about crossovers. So crossovers are just as a simple idea. You just have to kind of have some patience. If you're afraid of a value buying because you're not quite sure it's ready to come back yet, or you want some sign of confirmation, you want to have some idea of a reversal on the chart. An EMA line is great to use. SMA is fine, MA is fine too. But when the price goes from below an EMA line to above it and crosses over, that does show on that time frame, 10-day, 50-day, 200, whatever the EMA line is, on that time frame, we're seeing a reversal in that direction. The smaller the number, it's like a 10 EMA line, is not nearly as important as a 200 crossover, but still very important nonetheless. Let's check 4 examples and see what we could have done with an EMA crossover. Let's check. So this is APA. We can see that we're coming right down into value. Looks really good. Great support play. Great trend line here. It's holding, it's consolidating. Historically, it does that, consolidates. Every time at the bottom here, it seems to consolidate. I'm liking what I see. Let's say I like what I see, but the fundamental news, my mental analysis isn't all the way there. I want to see more of a reversal. Let's turn the EMA lines and see what we see. So let's go to studies, EMA lines real quick. We turn these on. So we see the 10's close. The 50's not that important. Neither is the 200, but this 10's mightily important. What you can do as a first step for EMA line crossovers, go back historically and see which ones had the best run-ups. What I'm looking for, when price gets above the 10, when price gets above the 50, when price gets above the 200, which line has the best run-ups? Let's check. So by run-ups, I mean going up the EMA line without being interrupted or canceled out. So we can see here, the 50 was fantastic over here. See how we bounced off the 50 plenty, barely crossed it, kept going. We did cross it, we did get below it. The 50 once again was beautiful, but the 10's also really good. The 50 once again is absolutely the best, but the 10 is still fine. What I do see with the 10 though is every time we get above it, we have a nice run up, with the worst case usually being break even. Right, we break the 10 here, you could at least sold at the top or at least broken even. Over the 10, could at least broken even. The 10's also really good, but this 50 is beautiful. The 50 is too far away, so I'm not going to use it. But on a short-term scale, I can use the 10 as my signal to go long. So the 10's not as good as the 50. The 50 is really good, but it's too far away. But the 10 on this time frame does show when you break above it, most times your worst case is breaking even. So here's APA. We can see pre-market, it gets above the 10 here. Love it. Let's say we just buy as soon as it gets over right there. Looks good. Now again, here's the problem. It's out of our loading zone. So take it for what it is. Sometimes if the EMA line doesn't get into loading zone, you have to wait for it to leave it. But again, we're looking for avoiding risk. We have some form of a short-term reversal. If you don't have the PDT rule, you can just put the stop loss below the 10 EMA line and let it run. With the PDT rule, you have to be a little more careful with this, but again, it looks pretty good to me. So let's say we buy in right here. We're gonna get rid of our loading zone. I think that this stop loss is too high for where we entered. I entered because of the 10 EMA line. So what I'm gonna do with our stop loss, what I would do, I would take it, I'd move it probably below this candle here, you know, this one here, right below it. So if we do dip down a little bit, that's fine. So if we do die off about, 3.5%, I want to get out. You can be even tighter if you wanted to, but again, I'd put my stop loss somewhere about there, right? Move this up, tighten up just a little bit. And as we can see, as time goes on, we can go forward just a little bit. We can see what happens is we're starting to see some life. That's really good. We can actually jump to now where we are today. And we can see once we got over it, we had a really nice run up. And we're now again holding right next to it. You could have validated out, just so we would have planned, would have bought in here. Easy 5% move, or again, validated out down here, or held on to it. It's up to you. But again, a clear sign over the 10 would have been a fine entry. So EMA line crossovers are great. They're good for you avoiding risk. It gives you some sign of us crossing over and giving us some type of reversal. I like it a lot. Let's check 3 more. So this is EA, a obvious uptrend. The consolidation or the downtrend is not as clean, but again, I do see lower highs consistently across the board here. We can see we have some form of value. Let's say it doesn't hit the value, right? We're getting close to it, but we're not quite there. Let's check the EMA lines and see what they show us as well here, and see if that's a good entry or not. So with the EMA lines turned on, we can see all 3 are right here. This is going to be a hard resistance, but if we break above this, that's a great sign of strength. Let's go back and see if any one line does best for run-ups, but again, with all 3 there, you break over that, you'll be in a really good shape. Let's check the historical data real quick. So we can go back and just see clearly that the 10 here is beautiful. We can see that the 50 over here, beautiful. The 50 is a downtrend, great. The 10 as a downtrend was great. Either one works fine. The 200 is not volatile enough, but again, just to get over that's a great signal to go long. But we can see that on the 10 or the 50 is just fine. We're down here looking pretty good. Let's jump a day ahead. So let's jump ahead. Boom. We get above it. Looks good. Let's say we were to put our entry right here. We get over the 50. We get over the 10. We get over the 200. That's fine. We get over it. We enter. My stop loss, I would not have down here. I probably put it somewhere close to here, right? Bottom of this move right here. This looks fine. We come crashing down 1.5%. I'll take that. We look at what it's doing today. It keeps going up. It's a great run up. And again, it's properly stacked here. What properly stacked means, we'll discuss this in a little bit too, is when you have price, your smallest EMA line or SMA line, your middle one, and then your longest one. For my charts, that would be price, 10, 50, 200. When it gets stacked like that, you're gonna have your best run-ups, your best chance for day trades, your best runs in general happen in this scenario. So again, that was a great look, a great play. EMA lines work great. The only issue with the EMA lines, this is what we'll talk about later when we wrap this part up, is that the risk versus reward does get a bit choppy. For some of these, again, you had to wait almost and give up almost 1.25% just to have this run up. But again, you waited for a crossover, looks good, you bought in, you didn't risk that much, and now it's already a 1-to-1 play. It keeps running, it makes us even better. EA, a clear EMA line crossover. You gave up some value for confirmation, it worked in your advantage, it worked well. Let's check two more. Here's GFL. Once again, if you were to think, hey, this is a great value stock, entering here makes a whole lot of sense. But if you are worried about the macro trends, you're worried about having some form of confirmation, I want to see us get over an EMA line to show some life. A fine idea. We can go back and look at all those run-ups. We can see once again, the 10 does a beautiful job. Again, you would have, canceled off a few times, but a good run-up. The 50 is fantastic as well. The 50 is really, really good. So is the 10. Again, I use these EMA lines. I can make different ones like the 40 or the 60, but again, more times than not for these kinds of plays, the 10 to 50 work fine for me. A 20, 30, 40 also shows some variety, but for me, you're wondering why I keep saying the 10 looks good, the 50 looks good. Well, because in this time frame for me, the 10 to 50 work the best. 200, again, good for a trend, but again, the 10 to 50 work best for me, in my opinion. So let's say you want to buy in over the 50 or the 10. You can choose either one. It's totally fine. Let's go to the next day. We're waiting for an EMA crossover. That's fine. And we can see on the next day, we have the 10 here. Let's say we go with the 10, right? You want to get a quicker movement. That's fine. You get above the 10. You buy in right there. That's fine. Get rid of our loading zone. I wouldn't have the stop loss this low. Again, we're risking 4.3 to make 5. You can take your stop loss, moving on up, Well, how about right where this candle is, right about here? This gap up, let's hold it here. Because we do crash down, right? 2.6 to 5. Makes sense to me. It's a 2-to-1, almost a 3-1 play here. That looks good. We then jump to the next day. Looks good here. We then jump ahead, and we can see we get above the 10. It keeps rolling up. The 50 and the 200 came with it. Looks really good. And right now, your play was about a 2-to-1. And so far, you've gotten a good 1.25 to 1. So again, your risk versus reward checked out. Doing good work. You're moving up. Looks real good. That crossover, again, you gave up your value for a sign of confirmation. It worked in your advantage. Looks good. You paid off. You did what you're supposed to do. Awesome stuff. Let's check one more. This is ORMP. ORP. We can see it's coming down beautifully. You only have 1, 2, 3 hits. It is a bit steep, right? You have $4 to $12. That's almost a 200% increase. I mean, it's a steep stock here. But again, the 200, you break it a bunch of times. So let's just say you want to see life over the 200. This is a great example of where the 200 will come in handy, right? A stock to where it gets below it a little bit a bunch of times, waiting for it to cross back over the 200 is a fine strategy for those who want some form of confirmation. So we're below the 200, looks great. So let's say we really like what we see here and we want to plan to buy in at 12.46 or 12.50. Anywhere in here is fine. You can put yourself a stop buy limit order right above here. A stop buy limit order is usually used for when you short and you want to have a stop loss for your short. So you're just like, hey, I'm going to sell 100 shares at $1. I have a stop buy limit order at 105. It's the same idea, but instead you're just going to execute your trade above. This is actually great for when you have a falling knife play and you don't want to actually just execute in. You want to set an alert above you, or you want to say, you know what, you want to see some light before you really buy in. A stop buy limit order is great for that, and this is a great example of using one in real life. So you can even set an alert here if you wanted to, because again, most limit buys are put below. So again, you want to say, hey, at 12.47, I want to get entered in. I want to cross over the 200. I want to see that happen. So you wait for that to happen. Let's jump ahead a little bit. Bang! We can see this nice takeoff, right? Boom, boom. It starts to take off, right? You can see pre-market, you're above it. So again, you'd probably get entered in around here. That's fine. Let's just be fair and say you get entered in up here. Let's not cheat. Looks good. For our stop loss, which you must assess here, you're risking 10 to make 7. That's not that good, so move your stop loss up. I don't think this is a good spot to be at. I would take my stop loss here, right? Take this, move it on up. I'd put it probably right below this candle, right? This to me gives us about 4 to 8, 2 to 1. Looks pretty good. We get entered in, looks fine. And let's kind of jump ahead one more day. Bang. So you can see right when you go above the 200, you're showing some great life. Now you're above the 50. This is not properly stacked. Remember, it's price 10, 50, 200. On the chart, it's price 50, 10, 200. Close, but no cigar. So again, the price is above all EMA lines, but the 10 is still below the 50. Once this 10 crosses the 50, price keeps going up, you're going to get a really nice run up, I think. We go from on demand, and we can see clearly with the 200 crossover as our entry point, you run up, you pull back, but again, you get properly stacked. Price 10, 50, 200. I don't think most folks would have held through this, but if you would have, you'd be up almost 15%, looking good, sitting pretty. I like it a lot. So that's a great strategy for you guys who are afraid of risk. You can always change your stop loss, move it up, all these kinds of things. But getting that short-term reversal is a fantastic thing to look for some form of light before you enter. The pro of this is, again, risk is minimized. You're going to have a better chance at seeing the reversal if you cross EMA lines and actually show data-wise and on the charts you're seeing reversal. The con's going to be value. Unless you have a buy-in spot that comes down hard, sits in that spot for a while, consolidates as the EMA lines come down, you're probably going to give up some form of value. As we saw on every chart, you bought above your loading zone. That's fine if that fits your edge or if it's the ticker. I myself buy off of value. I like to see it come down far, hit a spot, enter, and go from there. But this strategy is fantastic either way. One more thing to show you is being properly stacked. I want to mention this again. Let's check out some charts of being properly stacked and checking the run-ups. Let's check it out real quick. So what's great about this strategy is that with the EMA lines crossing over, you're going to get properly stacked more times than not for your best run-ups. Let's clear everything off. I don't even need to use this right now. Let's just check out the EMA lines. If you have no other information about OXLC, we can see when you get price, 10, 50, 200. You're going to have your best run-ups. You get this here, an easy run-up of 8%. You pull back, it happens again, easy run-up of 20%, right? Over here, you have some nice action, but again, you get price 10, 50, 200, easy run up. Happens again, easy run up. Over here, muddled. Again, you have a small one, a little fake out, but then again, easy run up, easy run up, easy run up. So this strategy does lend yourself to having the better run ups and better use of your time. Yeah, you're not going to capture the full move. That's okay. But again, you're having the best run ups. I like that a lot. Let's check two more to show you how this operates on this time frame. This is HYT. Again, if I told you nothing else, but to look for price 10, 50, 200, you'd see this. Easy run up, big one. Again, price 10, 50, 200, easy run up, a big one. Your best run up here was the same way, run up, run up. Every single time on this time frame, it does that. Even on BMY, a nice farmer play, again, more sporadic, right? But again, if you want to validate over the 10, you can see right here, a nice beautiful run up of 7%, all held above the 10. But of course, price 10, 50, 200. It comes down, muddled, confusing. Oh, breakout? Nope. 200's above. 200, it's price, 200, 50, 10. Not properly stacked, not a big run up. It comes back down, it gears up again, price 10, 50, 200. Ooh, a nice run up. Does it again, big ol' run up, and again over here, and again over here. So again, if you want to get better with this strategy and this buy-in, you have to get better at spotting opportunities for proper crosses and for the proper stacks. You're going to see when that 10 crosses the 50, when that 50 crosses the 200, and you get that price 10, 50, 200, the runs you're going to get are going to be insane. That's all for crossovers. Super simple idea. It's hard to perfect. You're going to give up value, but you're going to get in return risk management if you have your stop loss raised, and you're going to get more runs, better runs more often. Again, you're giving up the full move, you're giving up value, but what you see in return may work out better for you and your trading style. So the last strategy I use for beginners and just for anybody is scaling in. Scaling in is fantastic. It's going to kind of meet in between value and EMA lines. Now, EMA lines are important for this. They're not as important. You can use them as possibly another opportunity to add more to your position. But when it comes to value, the downside clearly is if you buy too early and it keeps dipping, you're going to be upset and get stopped out. And if you buy too late, You missed most of the move, and again, you open yourself up to more risk. Value buying is fine. It's not too bad. It's good for folks who are good at it. But scaling in bridges that gap between too risk adverse and then too maverick and too cavalier, and you kind of go right in the middle. What you can do for scaling in is you have to have a set amount of money. 500, 1,000, 2,000, 10,000, it doesn't matter. But before you scale in, make sure what you have is a set amount. The issue with some people is they think that scaling in is the same as averaging down. When you average down, you just kind of mindlessly throw money at a position that's dipping and dipping and dipping with no end in sight. That's not what I'm talking about. I'm saying, hey, we have a clear area of value. It may go higher and take off soon. It may go lower. I'm going to have 2 entries. One now based off this value, but then later I can decide to put more in if I have a sign of confirmation or a better value. What you're going to do is protect yourself from throwing it all in at once. The market tanks and you're hurt, because if the market tanks and only have half your position in with the same stop loss, life's okay, right? Let's check a few more. Let's check 4 examples and see what I'm showing you and what I'm talking about. Let's check it out. So it's a CLR, a beautiful uptrend, uber consistent. I know for a fact I want to take a position somewhere in this trend line that gets near support. That time is coming soon. So let's see, we're not going to buy in yet. I want to see it get into my area of value. I want 3160 or so. Let's wait and see what happens. So we jump ahead just a little bit. We can see CLR has hit our entry. It's hit our value. It looks good right here. What we're going to do is place half of what I would have bought originally right here. Let's do it. So I buy half of what I want to buy right here at this line. Boom, I'm in. Looks good. Now you have options. Now what you can do with technical analysis is you can buy lower if it dips anywhere from here to your stop loss area. Buy in lower. You can wait for it. It doesn't matter. It all comes down to feel. You want to wait for the secondary support to hit? Great. The bottom of that trend line? Great. You want to just let it go 2%? Great. Whatever you choose for value, letting it dip lower is fine. Buy it later. They just average you down. So again, instead of being here at like 31.75, you'd be in towards more 31. Again, a great entry. Even if you didn't scale in, just buying value lower is great. So again, you're giving yourself that opportunity to scale down once, which is fantastic. If it starts to take off, you can find some form of confirmation to buy in later. Maybe it's the top of your loading zone. Maybe it's over an email line. It's up to you. But again, once it starts to show some life, you can buy in. It takes off. Even if you get a crossover, you've still averaged in lower than that, and it keeps going up higher. It's still a great average. So right now we're going to trade at 31.60. Looks pretty good. Let's plan in case it starts to reverse sooner. I'm going to put a line right here, and I'm going to plan if we start to reverse sooner than I want to, I will fill my position at 32.07. Right? It starts to turn around. It gets here, I'll fill here, averaging out somewhere towards 31.84, which here is a fine entry. Let's say it keeps dipping just a little bit lower. Let's say it comes down maybe to the bottom of this trend line here towards 31.10, right down here. I will then complete my transaction here. So I have 50% here, and if it turns around, the rest gets put in here at $32. If it dips down to 31.10, the rest gets filled here. Let's see what happens. Let's go to the next day. So we can see it never actually got down here, right? We waited for it to kind of come down. It didn't. It turned around. Our full position gets filled here. So we can try and find the average if you want to. I'm just going to eyeball it because it doesn't really matter that much. For the sake, let's remove this. Let's remove that. So we got in at 32 and we got in at 31.70. That puts us at basically 31.85. Anywhere in there is fine. So we'll say we got in right here as an average right there. So that's a fine entry point. Again, lower could have been better. But again, we had a great plan. We executed it. And as we can see right now, that we're cruising up higher. You got a good 10% win here. You would have validated out towards the top here. Looks really good. Beautiful scaling in. We had the opportunity to average down here. But again, we had the good chance here of having 2 entries. Boom, boom, showing life. Get in. Looks good. So this one reversed quick. It took off quickly. So again, we had a position lower, a position a little bit higher. They averaged out, made a fantastic entry. We were avoiding risk the whole time. If it tanked, we'd be fine. Looks good. Let's check 3 more. So this is CRTO, a great uptrend. Looks beautiful. Let's say we buy in right here. It's before the market opens. Looks great. We buy in right here. Beautiful. This position right now. Great, let's have our position. Again, what we're gonna do is plan a scenario. If it dips, we're gonna then average down. If it starts to take off, we're gonna buy in higher, average the 2, and have a beautiful entry. Let's do that. So we wanna get ourselves a nice scenario. Let's put an alert here, or a buy limit here, or one down here, right? Whatever one comes first is fine. Let's make these dotted so you know what we're talking about. So we're in right now at that solid green line. We've entered at 39.15. If price this morning reverses and goes up to about 39.50, I'll buy in there. If it continues to dip and hits more towards 38.50, I'll enter there. We go a day ahead and we can see it takes off. It doesn't go lower, so we get rid of this one. And we've been entered here at this position right here, 39.50 and 39.15. Again, just multiply them, divide by 2, and you get something close to 39.35, 39.30. I'm not a math whiz, but that's what we're looking at. So we entered in again a little bit higher. We've now been averaged in somewhere towards 39.35, 39.30. Boom, right there. Right there, looks good. So we could have gone lower and validated in, but again, we came down. We entered here, and we entered here. Good average here. We can see with time going on, it's taken off very beautifully. A really good entry, looking somewhat towards a 9-10% win. Easy stuff here. We averaged up. That's fine. Let's check 2 more. So this is land. Let's say we're having a nice position come right down to this area. Beautiful. Let's say we've entered right about here at the top of our loading zone. Looks great. I want to enter just a little bit lower, right about here, or a little bit higher, right about here. So again, we're giving ourselves a nice little bracket. If price does go up, beautiful. We can still get a great average. If price comes down, beautiful. We got a better deal. That's awesome. Let's see what happens. We can see price comes right back down. We enter here, a little bit lower. Looks great. This is 23.20 and 23.35. So about 23.28. So again, just because you did that, you average down to right about here. Looks good. Get rid of that. You get rid of this if you wanted to. Boom. That's our play looking good. And as we can see, we're up about 2% now, letting this bad boy run. But again, a super easy idea. Let's do one more. So this is TXN. I myself, at this point, am very biased towards TXN. So I want to buy soon, but I don't want to be risky, right? So TXN, I'm willing to buy right at the top here, this trend line that I love. But again, I know that's earnings, so I'm not going to open myself up to all this risk possibly if it keeps dying down. So I'm going to put myself a buy limit for half my position right about here, right? More than I want to, but again, I want to get in this position, right? Let's see what happens. So we can see the next day. It comes in, boom, hits it, I'm now in. What I'm gonna do is I'm now gonna put a buy limit a little bit higher if it shows life, or a little bit lower if I wanna get a good value. What I am hoping for is the pullback, obviously. Let's make these dotted. These are our next loading areas, right? If it goes up to 185.60, I'll put the other half. If it comes down to 183 or so, I'll put the other half. Let's go a little bit ahead. We can see as the time goes on, we're getting towards the bottom here, like that. Let's see what happens. And as we can see, we hit the bottom here. It comes down, boom, hits our area. So we get rid of this and get rid of that if we wanted to clean it up. We bought it at 184.30 and 183, somewhere down here towards about 183.50 is our average. Looks good. It came down, hit it, and now we're up almost 1.67%. We've averaged in, low risk entering, good support play, good trend line. I like it a lot. It's a very easy concept. It is kind of hard to just chart, but again, it works pretty well just to show you the examples. Again, the pros of scaling in is that you are protecting yourself from risk. If you put in only half your position and it dips, you have 2 options. One, you cut at the same exact stop loss you set before entering and take half the loss. And in my opinion, taking half a loss, which could have been a whole loss, is a win. The second thing you can do, which some folks have a hard time conceptualizing as it said to them, if you average in, you can double your stop loss if you only put half in. So if I want to put $1,000 in, I only put $500 in, I can now effectively double my stop loss. They want to have the same amount of loss, right? If I was going to take a 3% loss on $1,000, I gotta take a 6% loss on $500. So if you want to get into a position and be like, hey, I trust it, I need to see some more life, I'm not quite ready yet, you can double your stop loss if you want to and really let that bad boy ride. That's a really nice upside of scaling in. The downside is patience and planning to really perfect this and be like, I think it's going to come down today. Takes a lot of macro market movements and a lot of patience to say, hey, I wanted to come down lower, wanted to go up higher, and wait. So for some beginners, it can be kind of rough to kind of have this thing, to have a whole plan predicated on having 2 or 3 steps for a buy-in. But as you get better, you'll see scaling in is fantastic for those of you who want to avoid risk and can do it. But again, it does get kind of hard for those beginners to kind of perfect averaging down once or twice, or again, adding in once or twice. So there you guys have it. You guys have 3 great strategies to buy into. Again, this is all predicated on a proper trading plan. You've set your loading zone where you operate all 3 of these in your loading zone. You say, hey, I'm ready to operate. Boom, I'm ready to buy in. I can do 1, 2, or 3. Good. You then have a price target, which again, we'll talk about validating out soon, and then a stop loss, which we discussed. The first way to buy in simply is value, right? You say the stock has gone down, it's on a pullback, it's taking off, I want to get in on this, right? It hits a spot on the chart you want to buy into. You can use any order of indicators. I just use the technical analysis chart to show you, but you could throw in EMA lines, you could throw in Vortex and RSI and stochastic and be like, I need RSI under 30, and I need stochastic negative 40, and I need this value be hit based on the trend line and support. Put a spot, it hits that, the alert goes off, you buy in, bing, bang, boom, easy. Again, the pros of this is the simplicity. If you truly trust the stock and just want to get in and get out, it's very simple. The con is that you may buy too early or too late, right? If you don't plan for that, and you can't read the future, obviously, if you buy a great stock that just dips hard overnight, you're in trouble, right? But besides the stock completely crumbling on you, it's not overly risky if you have a stop loss. The second strategy we discussed are confirmations over an EMA line. Again, the 10 to 50 for me on this time chart, the 180 day, work best. I like to see the 10 get crossed over, or take price over it. It's a great short-term confirmation. If price crosses the 50, it's a great medium-term confirmation. If you dip below the 200 and they get back over that, that's a large sign of a confirmation and reversal change in the last 200 days on average. So again, the 10's fine, 50's good, 200's great. The pros of this is that if you're more afraid of risk, you can enter with some form of confirmation that your hunch was right. You can move your stop loss up, and then you can use that EMA line as your stop loss area. And again, it's very easy to visualize. Like I entered here, the 10 EMA is holding, it looks good. I can now hold and continue to hold. The con is value. If you really like good value, you really like a great sell-off, a great red day, like I do, like red days, and it really comes crashing down, this is going to be kind of kerfuffle, because if a lot of things come down and they really shoot down like 10-20%, if you're waiting for a 50 cross, you may be 2 or 3 months away, right? So you want to wait for value, great. You want to wait for confirmation, great. But the confirmations may not be the best setup on big red days, big sell-offs, and again, you're giving them some form of value. The third strategy, which kind of bridges that gap pretty well, is scaling in. The main rule that I have for most folks who are beginners who want to scale in is have a set amount. I do not think it's a good idea for a beginner to have like $10,000 account and they put $1,000 into a ticker and it dips 10%. So you throw $1,000 more into it, it averages down, and then it dips 8% more, and then you throw more at it, and then you have this horrible cycle that you could just cut a loser and been okay. When I go to scale in, I have a set amount. I have $1,000 for this ticker. All I'm going to use is $1,000. Now you can do 35%, 35%, 30, and do 3 entries and just say, hey, I'm going to wait for this value. Boom, it hits it, enter. Oh, it's lower, enter. Oh, it's even lower, enter, and then it starts to turn around. Great. Or you just cut it. But to think that you're going to have an infinite amount of money to throw at a ticker is stupid. Have a set amount before you enter for scaling in. The second thing we discussed with scaling in is that it gives you a great opportunity for either confirmation or a better value. So if you get a good value nonetheless, and it goes down a little bit farther, like 2 or 3%, buying in 2 or 3% lower, average down 1.5%, that's good. That's a good entry in the first place. If you're willing to pay $1, but now you've averaged down 95 cents, you should be happy with that entry, right? Then you have a stop loss you can get out. On the other hand, if the price goes up and you go from $1 to $1.10 and you average that in, now $1.05, not a bad entry for a ticker that's kind of going up and taking a big leap, isn't it? So scaling in's pros is that you have better risk management, because again, if it tanks on you, only half your positions in, it's not that big of a deal, or 30% in, not that big of a deal. And again, you could double your stop loss if you wanted, and it does allow you to have a better value or a better confirmation, and you don't miss runners, right? If you're like, this bad boy is gonna blow, but I don't know if it's gonna go up or down, half is in, I'll see what it does later. The cons are time management and just the effectiveness if you're a beginner. If you're having a hard time just buying off of value, scaling in may be a little rough, especially if you have a hard time already monitoring and balancing 7 or 8 stocks. Like, hey, I have 6% of my portfolio here and 4 here, but I have 2% over there, but want to scale in more over there, it can get very confusing very quick. So again, it's good, it's great, but again, making it simple is always the objective for most of these things, right? If it's too complicated, give it some time, come back to it later, you'll be just fine. So there you guys have it. 3 great entry strategies that I use for a beginner. It's good stuff. So next is lesson 26. So you bought a loser, just like me. No, but let's say you have yourself a ticker that just dies off. What do you do? How do you handle it? What's the math behind cutting a bag or holding it? We'll check that out right now. Let's get into it.